SMT Nation, We Back Nation, in the attempt to bring more value here on the YouTube channel and the content that you consume from us, we're expanding the types of videos that we're making. Today, we're responding to the Apple earnings and how the stock market responded to it. There's some interesting developments here, maybe trends, maybe something to look out for. No financial advice here. We're just going on the response of Wall Street. All right, so from Barron's, I'll provide a link for the article. It'll be down in the description. Eric Savitz says, Apple stock slips despite earnings beat. Its services business fell short. China sales dipped 13%. So I think that tells us the story, right? Anyways, to kind of take away some of the main parts here of this article or this press release, based on the December quarter results, there's good things here. It says here, lower than expected growth in services seems to be one of the problems and why the stock appears to have dipped after market close here. And look, I don't understand sometimes Wall Street. I don't understand the stock market sometimes. You could have like 10 check boxes, 9 of them check good, 1 of them checks bad, and then the stock sells off, right? And not that it's something crazy. I think the stock was down like 1.5%, maybe 2% at its peak drop. But it says here that Apple reported a worrisome decline in its China business, where the company is seeing new competition in the smartphone market from Samsung and others. This was kind of talked about in the last quarter, though. Like this has been a discussion point for most of 2023. So Greater China sales were down $20.8 billion, down 13% from a year ago. Again, I don't think this was new. I don't think anybody was blindsided. Maybe it's the fact that the scale or the magnitude of the dip is larger than some people were anticipating. Financials look good, up 2% from a year ago on the revenue, snapping a 4-quarter string of revenue declines. Profits, $2.18 a share, forecasted $2.11 a share. All right, gross margins at 45.9%, up from 43% the year earlier quarter. So it looks like the money stuff makes a lot of sense here. Those are good, but it looks like the issue is a couple of things. So it says Mac sales were flat. It says here iPad sales down 25%. Wearables, home accessories, or home and accessories, $12 billion. That's above 11% from a year ago. So it was above consensus, $11.3 billion, but down 11% from a year ago. All right, so maybe those are the concerns, right? So the China, some of the products, and that's why it's trading down. All right, maybe some sellers there. I know a lot of people will take the opportunity, if they really believe in a company, to buy these dips. I mean, Apple, can you name a bigger stock than Apple? It's like Apple, Microsoft, Meta, like these companies, right? Like, where are you going to go to get those kind of revenues? You know what I mean? But an interesting situation to monitor as services numbers are down, China sales down, certain products down, right? Something to look forward to in 2024 is how do they try to reaccelerate those things and bring value and increase, revenues and things of that nature. But it's iPhone's still the one, right? All right. What do you guys think? What do you think of that news or that response negatively to Apple? Sound off in the comment section below. You're the voice of the people, the SMT Nation. Let your voice be heard.